Good morning, good afternoon, or good evening, everyone, wherever you are. Welcome to the Brooks Price Action Trading Room. And today is 1st of November. So new month, new chances, and new market to explore. And we have a very full house today. Welcome everyone to new joiners and people that have signed up for our free session today. I'm very happy to see that you all joined. Today is going to be interesting. There is a lot of news. There is an FOMC day, and so we'll be having a packed agenda. I will explain a couple of more things so members that have been around in the trading room will be familiar with my setup and how I trade. But during the session, I will explain a little bit more than usual the types of things that we're seeing, the types of things that we're looking at. This is, however, going to be a very normal trading room session. So what you experience today is how we're always presenting. There's different presenters here, and some of them will be presenting today. I will kick off the session. Rose will come in at noon EST, and Brad will come in at the end of the day, I think, for 2 p.m. EST into the close. And so you'll get a taste of the different presenters, each having their own style, but all of them trading the same way. We're looking at this chart. It's got a moving average of the 5 minute, it's got a moving average of the 60-minute, and the rest is price bars. That is how we trade, that is how we're taught to trade, and that is how we have become successful. So join us in the session. I'm very excited. Let's see what we have coming up. So we just had, I think, some job numbers came out. Market is rallying on the job numbers. We're trading currently pre-market around 42.09, 42.10, not too far away from yesterday's close. What I'll usually do is I'll go through some of the higher time frames to get an understanding and to get maybe a bias on what might happen going into the day. I'll go through the previous day as well, just to show what I saw and how I traded that. And then usually we'll make sure that we're ready for the open about a couple of minutes before the open, so that everybody can have a fresh coffee and a breather before we then start. Is this a room where we call out trades and where we tell you to go long and short? No. So I am trading here on my other screen. I will tell you what I see and I will tell you what I do, but this is not a signal service. This is a educational trading room where Al Brooks and his co-presenters are explaining you what we see, what we do, and how we would trade things. And I might tell you indeed if I'm long or short, when this is not a signal service, okay? And I think that is the way to go. This is a service where basically we want to make sure that you are on your own as quick as possible, profitable and well, and trading in a style, in a way that makes you happy and profitable. So this is an educational service, just like Al Brooks. His books and everything that he does is an educational service put in place to make you successful as soon as possible. Now, who am I? I'm Tim Stout. I live, depending on the season, I live in Amsterdam or Barcelona. So I'm European based. It is 2 o'clock my time. Normally it's 3 o'clock, but we have already switched to winter time. So I trade around the afternoon for the US indices, but most of my trades are coming from trading the German DAX, which is the index in Germany, 40 stocks in Germany. And I run a channel there as well with members to trade the German markets. In the afternoon, I get the opportunity to then also trade the US markets. And I usually wrap up around 30 bars or so into the day, which is then around 6 p.m., 7 p.m. my time. So being in Europe gives me that opportunity, amongst other good things that we have here. But I'm very happy to present you through the price action today. As usual, there is a Discord connected to this trading room where you can post questions. There are different topics in the Discord there. There's one that is the trading room chat. The trading room chat is where you can comment and discuss about what's happening in the trading room. And if there is a question for me or for one of the other presenters directly, please tag my name. So at Tim Stout in the Discord, you can tag my name. And I also will see if I can open the Q&A on this webinar so that you can put questions in there as well. Now questions, I can't answer all of the questions directly, but usually there is some time during the day to go through them. So if the market is very volatile, very busy, or if I'm just managing my own trades, then I might not be directly able to answer your questions, but I will do as soon as I can. All right, so that's it. Again, very warm welcome to everybody here attending. Let's go through some of the higher time frames. So on the screen, what you see here, first of all, on the right is the 5-minute E-mini, 81 bars. So just exactly like the textbook setups. There is a 20-period moving average here that is on the 5-minute. And there's also a 20-period moving average here borrowed from the 60-minute chart. So this is the 60-minute chart moving average and the 5-minute moving average. And then I have bar numbers so that we can talk about the numbers instead of the hours or time frames. So this is yesterday, this was the day before, and then this was last week. I'll go through that later. On the left-hand side here, you're seeing two different blocks, the 50-minute RTH, so that is regular trading hours, so you can see this from yesterday. And I also have the 50-minute Globex showing overnight price action. And then on both of them, I also have a tab for how that looks like on the 60-minute chart. Not that I look a lot at the 60-minute chart, but sometimes it gives me very interesting targets that I can then on the 5-minute chart trade towards to. So I'll be looking at, around the open, I'll be looking at the Globex 50-minute chart and also, of course, the RTH 50-minute chart while I'm trading the 5-minute chart. This is my setup. No, I'm not saying that this should be your setup. I'm just saying this is what we use and what I use. Makes me feel comfortable. I've been doing this for at least a decade or more, and I've never changed my setup in the last couple of years. So what works for me is what works for me. Now, let's look at yesterday, but let's look at where we are on the weekly chart. I think the weekly chart is the most interesting. Monthly chart maybe first, because we are starting a new month. October closed yesterday as a third consecutive bear bar. I mentioned in the trading room already last Monday, that is quite unusual. Where in the monthly chart have you seen 3 consecutive trending bear bars? I don't think you have seen them since my chart goes back to 2009. I don't think since 2009 you've seen 3 consecutive bear bars. And you can argue that the first one is not really a trend bar, but it's still thinking that as soon as it closed, it sold off. So I still think it counts into the range. You had 3 bear bars here in 2022, but the middle one was a hesitation doji. And so the third one tested the low of the second one. That was already quite significant, but I think this is more significant. And so even if we go up 4,400, 4,500, I don't think we'll get there, but even if we go up 4,400, I still think we'll come down to at least the close of October, which was 4,212, but we might come down a little further, maybe test February, maybe test December, or all the way down, testing 3,400 and the bottom of the channel. So that was the monthly chart. Today is a new month, so we're at the open of the month. We've had 3 bear bars. I said that. What is the chance of getting a 4th bear bar? Well, if 3 bear bars is already quite unique, then 4 bear bars would be really unique. And so there's a smaller chance that we'll get a 4th bear bar on the monthly chart than that we'll get a doji or a bull bar on the monthly chart in November. So my guess is that 4212, the end of November, will be higher than 4212. That could be 4213, but that could also be 4400 or somewhere in maybe a 50% pullback price around 4400. You can also look at the bull case. So bulls have maybe bought the close of July. They might scale in lower at the low of May. And so where would they be happy to get out break even? At the midpoint of those prices. So if I buy this low, if I buy that close, the midpoint is going to be 44.08. So an extra reason for bulls to also want to go to that 50% pullback point, 4,400. Bulls will sell at the 4,400 to break even. Would bears sell at 4,400 as well? I think so, because at 4,400 or a little above, you could sell, put your stop there, and then having your target at the close of October. So that is where a small pullback to 4,400 could come before further down. Now, what does that say on the daily chart? If there is a monthly chart going that way, nothing, because we can easily sell off another 100 points before going up. But I just think on the monthly chart, there might be some support around these levels. On the weekly chart, so this is Globex included, which makes it look nicely continuous. On the weekly chart, we've had 3 pushes down. So 1 push, pullback, 2nd push, pullback, 3rd push. We are at support ranges. And also, and I've said this on Monday as well, we've also been closing all of the gaps. In a trading range, it's usual, it's very normal to have gaps closing. So once this is a sell-off, you can see there's a gap here, you see there's a gap here, there's a gap here. And on the way up, we start closing all of those gaps. Then on the way up, we leave some gaps behind to the high of this, to the high of that, to the high of that. And when we come down, we're closing all of those gaps. Same on the way up, same on the way down, same on the way up, same on the way down. And so this leg down has closed the gap, the last open gap that was to that high. Let me change quickly the mouse setting. I have, sometimes that works better. Here we go. There we go. So there's a gap there. As soon as we come down, we close that gap there. Now we have some gaps to the upside. So we have a gap there at that low of the bull bar. We have a gap at the low of the bear bar. And we have a gap there at the low of an inside bear bar. I think the inside bear bar there is quite interesting because an inside bar in a trading range will typically work as a magnet. And so there is a chance that we'll get back all the way to that area, which is, I can't see that with this drawing tool. Let's go back, which is 44.94. So that might be a pullback point. I think this needs maybe more of a double bottom. So we could just come back now to 42.35, which is that breakout point, and then come back down and then go back up, or this is going to accelerate immediately today. Now, today there is a FOMC report, FOMC interest rate decision and press conference that makes enough of a move that you would have to consider that move to be a new day. So there could be a huge breakout around, what is the EST time? Around 2 p.m. EST, I think. So that is 7 o'clock Central Europe time now that we are on winter time. So there will be a news announcement and that will cause the volatility to spike. Interestingly enough, the weekly chart is still an inside bar. That is unusual. We've only had an inside bar here, an inside bar here. But what are the chances that this is not going to go below last week and not going to go above or go above last week's high? I think those chances are small. So I'm actually expecting either a sell-off or an acceleration to the upside for this not to become an inside bar. It can become an inside bar, but chances are that it's not. We'll have to see how FOMC develops. And typically, the FOMC report on the day itself is just the initial reaction. So that could go up, down, up or down, up, down at the same time. But typically, the day after FOMC, you have a large trend day as well. So my expectation is that whatever happens today is going to find continuation tomorrow in a larger trend day. On the daily chart, where are we? So you can see that sell-off here on the daily chart as well, leg 1, leg 2, leg 3 from the weekly chart. We had a breakout below this low. It failed initially, it pulled back, and then it succeeded. But I still think that we're going to come back to this low, so that's 42.35. We might even come back to the low of October 24, and we might even come back to the close of October 24, which is 42.71. Bulls will want to target the high of October 25. That is a lower high for the bears, right? Leg 1, pullback, leg 2. So there's a lower high here. Bulls will want to test into that lower high to see if the bears can sell again there, or to see if they can overpower the bears and get us up to a measured move higher around 4,400. I'm not seeing bulls do that, but you never know. But I'm interested in seeing what happens at, first of all, at that low, at this low, and at that low. All right, so that's the longer time frames, monthly, weekly, daily. That's good to know, but it doesn't give us anything on the next 5-minute bar, okay? And so let's take a look more, 10 minutes before the open, where we are in the cycle right now. So we have a bull channel over the last couple of days. We're channeling up and we're accelerating in the last hour. We had a big hour here, we had a big hour here, but none of the hours, none of the big bull bars here on the 60-minute chart got immediate continuation. This one pulled back all the way almost to its low. This one pulled back at least 50% before resuming up. So what's this bar going to do? Well, it already pulled back and we're now back at the high of that bull bar. Can we get to the channel line? Can we break above the channel line? Can we get a measured move above the channel line? It's all things that bulls are hoping for, but the reality is that the last couple of days, they didn't get any big continuation on their hourly bars. The bears didn't get that either, right? Any big bear bar was just a sell climax back to support and did not get any continuation since October 26. So we're in a bull channel, but we're also in a trading range. This is a leg in what will become a trading range. And we're trading currently around 42.20. On the 15-minute chart, it was interesting. On the 15-minute chart, we went sideways overnight. We went up and then we went down. And we just broke above this line here, which I think is going to be the measurement for a measured move up. So we broke above that bear bar, that lower high. We pulled back almost to that lower high, and now we're resuming up. Makes me want to think that our measured move target, let me measure that exactly, measured move target is 42.22.25, and it's one tick away from where we are at the moment. We just pierced it. So that's what I'm seeing. Pre-market, we're bullish, but it's also a little bit of a trading range context overnight. Let's see if the bulls can continue opening around 42.22 at the moment. That would be a little bit above yesterday's high. What are the chances that we're not going to close the gap to yesterday's high? I don't think the chance is all that great. I think bears want to close gaps to yesterday's high. Now, will they close the gap to yesterday's high immediately? No, it doesn't have to be. We can easily run 30 points up and then come down to test to close the gap to yesterday's high. It can also be that we're closing the gap to yesterday's high tomorrow or during FOMC. So it's not a valid trade to just watch the open and short it. You would have to see a setup and then have to trade that setup. Then yesterday was a interesting day. I think it was continuation from yesterday. So first thing that I saw already was the big leg up, the pullback, and then the resumption up to the measured move. So leg 1, pullback, leg 2. You could also see that the pullback was around 50%. So 50% was here, the pullback was here. And the other thing that was maybe difficult to find was there was an opening range. And when we broke above that first 15-minute bar, I would look for a measured move up to 42.1475. That's exactly where we came. You could also argue that the close of yesterday, this was a spike and that this was a channel. That's also valid because you can draw a channel roughly from here to here, and then you will be right in saying this is a bull spike, pullback, and then channel. All of those assumptions were good as long as you kept buying sort of after bar 30. I think this was an opening range. We went down, we went up, we tested down. We circulated in that trading range for a while, but after 42, 43, 44, midday trend reversal, well, the trend was sideways and the midday reversal was to up. This transitioned into a small pullback bull channel, and ultimately it reached several measured moves, double top, and then a little profit taking sell off into the close. That I think is what happened. Usually Brad will put a blog in on the bookstradingcourse.com website, and he will mention, rightfully so, that on most days it pays to wait for a bar of 6 before your first trade. Wait for a bar of 6. Why? Because there's often a adverse move before the real move starts. So sometimes it goes down before it goes up. Sometimes it goes up before it goes down. And you want to observe the market a little bit. So yesterday, if you had waited 6 bars, you would be hopeful for a big bear trend day on bars 1 and 2. You would see that bar 3 is an inside bar, so you would already think, maybe this is not a big bear trend day. That should not be an inside bar. That should be a third big bear bar. Then you see 4 going above 3, and now you know that we're probably in a trading range. And then you see leg 1, leg 2, leg 3. Now you're thinking this might be a truncated wedge. Truncated, why? Because it doesn't get 3 pushes all the way to the wedge line or to the trend line. It starts to reverse up immediately. And then when you see bar 8, now you know what to do. So you've waited 6 bars, you see bar 8. Bar 8 is probably the best buy of the day. It created the low of the day. You could have scalped out as soon as it reaches the open. There were bears waiting here to sell it back to the 3 close and the 7 high. That's exactly what happened there at the touch of the 7 high. So we were still in a trading range there. But then as soon as you see 15, now you know that the dominant factor of the day is bars 8 and 9, and that bar 15 we're probably going higher. What's the first obvious target? Well, yesterday's high. What's the second obvious target? Some measured move. So you're starting to look for what can be a measured move. You can look for it on the 50-minute chart. So I would look for it here, probably to above that bear bar. But it was easier to find on the 60-minute chart, because on the 60-minute chart, the first hour was a bear bar closing at the top, and then this 4th bar was a breakout with continuation. So you could have found it on the hourly chart. 1525 was your measured move target. There's more to say about yesterday, but there's not more time. So let's just focus ourselves on getting into the open. I'll give you a couple of minutes, and then I'll be back with you at the open of the day. A couple of minutes to the open, 2 minutes to the open. We're trading around 42.2275. And again, on the left bottom here, I have the 15-minute chart on Globex, and on the top here, I have the 15-minute chart on regular trading hours, so with the close from yesterday, and then we'll see here what happens. I also have those charts here as tabs that I can quickly open them. So through the session, I'll jump a little bit through the different charts just to see where we are and where I can find targets. My trading style is mostly defined by finding targets first, and then knowing where the stop is, I'll find where to enter. I typically don't ever enter a trade if there's not at least a 1-to-1 risk reward, but more likely I try to find something that has 2-to-1 risk reward. and we'll see what that means today at the open. Now, we'll go through this later probably as well when we're in the day, but today is FOMC. Usually FOMC days are finding some sort of a level to stay around before the news release. Basically, you can say that market is trying to become neutral. What is neutral? Nobody knows where the neutral price is, but it makes sense that it is around 4,200. And so that we'll see where we are right before the news event. But let's first take a look at the open. So we have a gap up. Gap up, usually you look to buy somewhere because the market is bullish. Is it a huge gap up that is so large that we can go higher? No, I don't think it's a huge gap. So the gap is around 15 points. That is not a relatively large gap in the Emini, but what is the context from yesterday? The context from yesterday was a small pullback bull trend that was forming in the channel, and we're breaking above the channel. Now, what does Al say about channels? When we're breaking out above a bull channel, that is unsustainable climactic behavior. And so will we go up 60 points from here? I don't think so, so I'm not ready to go long anywhere in here. I would want to see what happens on a pullback. And you can see that we're forming price action back into the channel. I don't like to have too many lines on my chart, so I'll draw them and quickly take them off. Bar one, what do you do here? Nothing. There's 80 bars left, so 80 more opportunities on the 5-minute chart to set a good trade. Bar one is just setting the scene of the day for me. So what is the market trying to do? As soon as I figure out what the market is trying to do and I get a good setup, that's when I'll praise my trade. But we are trading not even a full chart on the 10-second chart, right? So this is just for the initial orders to come in. Usually we'll go down a little bit before we go up. Market is bullish, but you can see the first bar is already very bearish. And so if I measure from the close of yesterday to the high of bar one, that is 42.1425 would be a 50% pullback. It's nice to see if the bears can reach that. And what I'll be looking for is to see who's making money. Are bears making money here or are bulls making money? Now, the easiest way to judge if bulls and bears are making money is to find out if on a 5-minute chart, if you sell or buy the close, can you make money? And so if I go back to Monday, you had a big bull bar one, and I'm looking to see if the bulls can make money. So if I put a stop under bar one and I buy the close of bar one, so let me do it like this. So I put my stop one tick below and I run up to the close of one, would I make money? Would I get at least 1 R? So once my risk. If I risk here, what is it, 8 points? Would I make 8 points? And in this case, I would. Okay? So on bar 4, I would have made money if I just bought bar 1, stop below. So bulls are making money. Are the bears making money? Yes, as well, because if I sold bar 6, the first bear bar, and I sold the close of it, I would have not only made one time my risk, I would also make twice my risk. Same here for bar 9. If I sell the close of bar 9, put my stop above it, not only would I make once my risk, but I would actually make twice my risk as well. So the bears are quite strong in here. But then here on bar 21, this is where the bears can still make 1 R, but they fail to make 2 R. That is for me a bullish signal. The bears are no longer making 2 times their risk. They're only able to make 1 time their risk. And the bulls could take over the market. That is what you saw here happening on 24. That ran up. It never got to the low of 24 again. We just went higher immediately from there. So on this bar, as soon as this closes bearish, I will just see, I'm not going to trade this, but I just want to see if I sell the close, would I make a target? So give it 2 seconds to close the bar. It's closed at 18. So 1 hour for me is 12.75. I'll put a line there, and 2 hour for me is 7.50. Okay. If the bulls are doing that, then at least they're making money. That means that if they sell higher and on a bear bar, they expect as well to make money. If the bulls are also going to make money on the first bull bar, then the market is a little bit more two-sided than a strong trending. Is this a bull trend from the open? No. Did it already close the gap to yesterday's high? Not yet. The gap is 2 ticks. So I'm expecting that they will close the gap. But it's also not strongly bearish. Bar 1 closes, it goes, 3 ticks down before it reverses up. So it's not a bear trend from the open at the moment either. You would want to see an immediate sell-off and immediate continuation to the downside. So it's already pointing me to the fact that today might be a trading range, despite this big bull trend right before the open. The open itself doesn't look like a bull trend. R2 is still an inside bar at the moment, so it's pulling back from the bearishness. It pulled already back more than 50%. So somewhere on the lower time frame, bears are selling this pullback to get back to the 1 close, and they just got that. Okay, that's a very normal trade to take on the higher time frame as well. So yesterday we had a big first 3 bars. So on the 15-minute chart, the bar 3 close is the close on the 15-minute chart. Now, if we don't go above bar 1, the bears will sell all of this, trying to get back to the 3 close. Okay, especially above the middle, you're taking this for a better than 1-to-1 trade. So if you're selling here at the 10 close or below 11, putting a stop above 1, betting that we're going to go back to the 3 close and the 7 high, you already got a better than 1-to-1 trade. So it would be around 1.5. If you would be aggressive and put your stop above 11, sell below 11, you actually got a 2-to-1 trade, and so you already have twice more than your initial risk on that. So that's happening here on a smaller time frame. Bears are selling higher and higher, trying to come back to that 42.18 and trying to break, of course, the low of 1. What will be at the low of 1? More sellers or more buyers? Well, it's a gap up. It's close to a 50% pullback. And especially if bar 2 stays an inside bar, there's a good chance of actually more buyers than sellers. Does that give me a good reason to trade? No, because we only have 2 bars. I don't see enough of a setup to just blindly go and buy when we're in a 2-3 day trading range and we're above the trading range. I would be buying at the high of the trading range. So I'm still waiting. Bear bar after a gap up. So we have up, down, and now we have an inside bar. All of this is confusing. It's a trading range. Now, where's the high of the trading range? Where's the low of the trading range? We don't know. But we do know where, for example, the high of the Globex is. So 24.75 is Globex high. And 91.25 is Globex low. That's here. So Globex high and Globex low, 90% of the days will surpass either the Globex high or the Globex low. If the range is small, we will. There's an increased chance that we will surpass both. So then we might go above the high and below the low. Is this a small range? No, it's not a small range. If it's sort of above half of a normal daily range, the Globex range is considered to be big. And so I'm guessing, considering where we are, that we're just going to surpass the Globex high only. I will leave this line on the chart until we surpass one of these. Globex low. And so while we're waiting for something to happen, just want to give a very warm welcome again to everybody attending the Books Price Action Trading Room today. Today is a free session, so we have an enormous crowd, and I see that a large amount of people just entered when market was opening. So good morning, good afternoon, everyone. My name is Tim Stout. I'll be covering the first 2.5 hours or something of the market. And then Rose will come in after me, and then Brad will come in after her. So you get a nice taste today of how things are going in the Brooks trading room. We have different presenters here, so there's a calendar on the Discord as well about the speakers and when they are presenting, and so you can have a chance of going into the Discord, ask questions there. But I've also opened the questions box here in the webinar, and then I'll be taking a look at those as well. So if the price action is quiet, and it is at the moment, I'll take some time to go through questions and comments. Now, regular members, of course, go first. Just kidding. But if there's any questions about the setup or about things that we're talking about, do not hesitate to ask questions. If we don't have time to go through, then we might take another time, or we're just going to answer them in the Discord. Okay. So what's happening now? Bar 3 is about to close in 90 seconds. Bar 3 is important. It is a 50-minute bar as well. So something that is a setup on the 5-minute and on the 50-minute chart is stronger for me to take. We're gapping above yesterday's high. There's a range here from yesterday. So a range here to the 79 high, that already got met. There's an additional range here to yesterday's 68.69 bar. That is to 42.2450. The Globex high is at 42.2475. Makes me believe that we're going to go to that target. But bar 2 was an inside bar. It was a bull inside bar. So there might be sellers at 42.2450, 42.2475 and higher wanting to come back to that 2 high. Or we might even not be able to close a bull bar on the 50-minute chart at all. So we have 40 seconds left for that. It would be good for bulls to take out the 1 high. Because if you take out a 1 high and bears sold it and they get stopped out, there's an increased chance that we actually get a measured move up to 42.30. So I would want to see something that breaks strongly above 1, pulls back, or it goes immediately to 42.30.50. Right now, I think that we're gonna see 42.2475, the Globex high, but I still need to see a good close on the 50-minute chart, and then some continuation. Okay, so 50-minute chart, it closed as a bear bar. You see it here on the left top. But it follows a strong leg up. So the strong leg up on the Globex had 1 leg. It had 2 legs. It might need a 3rd leg. Every leg here was about 16 points. And so a 3rd leg up would be about 16 points as well. That would get us right into that 42.30 target. So I'm already thinking that we might just go above bar 1 to 42.30.50. I just don't have a trade for that yet. Can you buy above 2? It's an inside bar after a bear bar. I think low probability. Can you buy above 3? Well, we're still inside the range of bar 1. So, and it has a big tail, so can you buy above 3? Probably not. It's better if something closes above bar 1 and then ride it up to 42.30.50. Now, what do bears want? Bears always want the opposite of bulls. So bears want continuation down. They want closes into this range to make me not want to think that we break out a measured move above that range. So if you take this range and you want to have a measured move into the target of that range, when is that measured move invalid? If you have 1 strong close back into the range, okay? You should be pulling back to the high of the range, maybe a little bit inside of it, and it should then go and never come back. So right now, it pulled back to the high of that range. It starts to go and it never comes back. That makes me believe that 42.2450, 42.2475 is valid. The same is now the case for the range of bar 1. So the bar 1 range is sort of a trading range. that if we break out of that trading range, that 42.30.50 would be the target, but only if there's not a strong bear move back into the range. Okay, so right now this would be a nice breakout. If we would close here, we still have 2.5 minutes to go. 42.30.50 would be my target. We're already at Globex high. That's good. I said here on the Globex chart, we had one leg, we had two legs, and we're now building the third leg. Two of the three legs are usually the same size. So the first leg here, if I take this chart with me, so the first leg here was 26 points. Okay, the second leg was not as near as good. That was 19 points. So I'm expecting leg 3. Well, if I'm conservative, I'm expecting it to be 19 points, same as leg 2. That will build us and bring us to around 42.34. On the 15, we're also breaking above that bear bar. So I'm expecting 42.30.50 as a minimum target. Lastly, I'm expecting this whole range to be a measured move, 42.30.75. But now I have 3 targets in the 42.30, makes me believe that we're going to 42.30. Okay. But the additional benefit is, of course, that is more than 2 points away from here. You need 2 points profit to pay a month of subscription in the trading room. So if I can get you guys that, then we have all of you as members in the trading room. Look at the strong breakout. Now, granted, it's still 11 minutes before this bar closes, but it looks to be a big breakout above the first 50-minute bar. Okay, so again, 42.30 is then my target. So good to be long. Good to be a little long where you can scale in, or just good to be long, stop at the lows. We're fighting for a close above the Globex high. Very good close for the bulls. 42.30 is the minimum that they would now want. In addition, they would want to have at least a measured move or a 1 hour the size of this bar. So that would be 42.36.25. Let's see if they pull back to the 1 high. The pullback often tells me where the measured move is going to go to. So we broke out above this range, we pulled back to the range, and then we started reversing up. So my first idea was that the measured move would be to this high, to that close. Well, it just ran through it. And so it might actually be that the range on this is bigger and that the measured move is to 42.29.50 and then 42.30. If this tries to test bar 1 and reverses up, then obviously the measured move was bar 1, and then 42.30 is the minimum target. Some bulls will be disappointed that we haven't gone above 4 yet. Some bulls will want to buy in the 42.24 region, and so they're not happy to buy the close, because if this is their reward and this is their risk, they don't like it. So we might come down a little bit more, but if we're continuing and just started shooting up above 42.28.25, then we might actually just go to 42.36. Because if the bulls are happy to buy here with their stop there, they won't take profit here, they'll take profit higher. If we come down to 42.24 area, then 42.30.25 and 42.30.50 would actually be more likely the targets for the bulls. Think about it. If my stop is below 4 and I buy here, then 1 to 1 is 36.25. If my target is 42.30.50, then my 1 to 1 is only at 24. So I might not be willing to buy this close if 30.50 is where I think we're going, because my reward is smaller than my risk. And that must mean that I've got good probability, but I just don't want to take that trade. So I'd much rather buy here at the 24, which I think some bulls will be doing, so that we can actually run it up to 30.50 from there. If I see them buying here exactly at 24 where we are now, and we're now reversing up, I'm very, very confident that 30.50 is going to be where they will be heading. So I just bought 24 stop below 4, and I want 30.50. You can take everything off 30.50. You can see what happens at 30.50 before you decide to take profits, or you can take partial profits at 30.50. All is good as long as you care about your trader's equation. And so my trader's equation at the moment is 1-to-1, 25. So we have 30.25 and 30.50 as our targets for the bulls. We went a tick above 4. There were some profit takers there, but we didn't close a strong bear bar for the bears. So bears are trying to get us back into the range, but they know that they'll probably not be successful considering this close. Some bulls will buy the 4 close, and they'll try to buy 50%, a 50% pullback and then get out if that is going to be the case. This was not a 50% pullback, right? 50% was 22.50. So I think they didn't get a chance to scale in, so they'll actually hold. If bar 5 was more disappointing than that, they could exit at the 4 close. So you buy the 4 close, you get disappointed, you get out. Some bulls are doing that, but I think that most of the bulls will hold, and that will go to 30.25 and 30.50. And the next bar is going to be a close on the 50-minute chart, and it's going to be a close on the hourly Globex chart. And so bears are doing what they can to not make it close on its high. Bears are also doing what they can to not make this a successful breakout. So on the 50-minute chart, the high was at the 1 high. They want the second 50-minute bull bar to not be above the 1 high, because then it looks like a successful breakout, and it looks to go to 30.25, 30.50. If the bears can close a bar back into the range, bulls will assume a failed breakout, and they will buy back either with a profit on the scale in, or they'll buy back break even the longs that they bought here at 24. And it's like I said, like I want to see 24 hit, and then I want to see continuation, which I got. But if we now come down further, then I don't see a breakout that never comes back. I see a breakout that actually comes back. So then I want to scale in and get out around my original entry, which was 24. But this is still looking good. So the second bar is still closing well above the first bar at the moment. 2 minutes left. Continuation to 42.30 is what the bulls need. And then probably the bar 5 will function as a pullback measured move as well into 32.75. Now, is that a bull trend? Probably not, right? You had a big bear bar, you had 2-3 inside the big bear bar, you have a big breakout bar 4 with bad continuation 5. So we're not in a bull trend, we're in a bull leg in a trading range, and the breakout is about to fail. So it's a trading range price action and not necessarily a bull trend. That doesn't mean that we can go higher, but it's just meaning that we're doing this in a lag in a trading range type of style and not necessarily as a bull trend. So a high 1 is not what you want to buy, and a low 1 is not what you want to sell in a trading range. Much more low 2, high 2s at good locations, and much more scalping. High 2s at good locations, and much more scalping. All right, I still see pullback to the 1 high and continuation here as a close. So I'll give bulls the favor of the doubt, the benefit of the doubt. But we need a new high for the bulls. You can see that battle going on for the 50-minute close. The bulls won, and we're at target. Some news event. Appears right at my target. Appears right at my second target as well. But I think you want to take profits here because it is our third leg complete on the bull trend. So prices can come down now. If you're still long, you should be very quick to take profits if it comes down further. Now, some news event, I don't care about what the news event is. Usually something happens at around bar 7. I don't cancel trades or do trades for that, but I'll see, and I have my targets here at the screen at all times. In this case, I just have limit orders ready, and I just need to activate them. So I activated limit orders at 42, 30, 50 to take profit. Can I come back there again? Possibly. I think 30, 50 might be hit again, giving you a second chance to take profits. I didn't see because it went so quick if you had 2 chances, but normally the market is giving you 2 chances to take profits at a nice entry point. And you can see what happens when I drew that line there about the average area of the third leg. It pierced a little bit above it. So this was the area where I said, if you have 3 pushes, the third push will be either, if the first 2 pushes are the same size, the third push will be a different size. But if the first 2 pushes are already of a different size, the third push will be the same as one of the 2 pushes. And so I said that it was probably going to be the smaller push of 19 points. Market rallied up to, what is it, 21 points, and then reversed. So in a 3-push pattern, at least 2 pushes are about the same size. And you can see that market is going to give you now a second chance to take profits at the 30-50. And I would take it because this is still a trading range and not a strong bull trend. The measured move was to the size of the pullback. So 6 and 5 were going to 33.75. Let me take this off and this off. You can see that if you have a pullback, and basically bar 1 was a pullback. You have a bull spike, which is the gap. Then bar 1 is a pullback, and then bar 4 is a breakout above the pullback. Well, that pullback is going to give you a measured move. 5 and 6 were a pullback in this bear trend as well. So you have up, down, up, down, up. And so the size of the pullback bar 5 and 6 to the upside was 33.75, and that was the final profit target for the bulls. All right, so what now? I'm flat. Can we go higher? Sure. We had a strong bull close on the 60-minute chart. We had a strong, we had a bull close on the 50-minute chart with a big tail. But my problem is that we're still breaking above a bull channel with not much of a, or not enough of a pullback back into the channel. So I'm very careful of holding longs here, and I'm very careful of buying more at this level. I think we're going to come down. There's a gap here on the 3 high to the 6 low. If this is a trading range, and I think it is, this gap should close. And we should also be able to close the gap to yesterday's high. So I'm hesitant to stay long and buy more at this level. I just want to see what happens. And a pullback, maybe a second leg up on the 50-minute chart, but this was, I think for now, it for the bulls. We'll just have to see a new trade coming. So I bought 24, right? So I bought exactly the low of 5. And it's the same setup. If you think about it, it's the same setup as yesterday. So where is a good example? This is a good example, but it's a little bit too difficult. Well, here's a good example. So I'm looking at the first 3 bars. So the first 3 bars to the close of the third bar is, I envision, when I look at a 5-minute chart, I can sort of envision what the hourly chart looks like, what the 50-minute chart looks like, without having to actually look at the 50-minute chart. So everybody knows first three bars are bearish. That means that the whole 50-minute chart is a bear bar. Now, what traders need to decide is that going to get a equal leg down, or are we going to go to above bar one and trigger the stops for the 50-minute bears? Well, good continuation, 3, 4, 4, 5, 6. So chances are that this bar is going to get a equal distance leg downward. And so as long as we stay below bar one, that is actually more likely. Now, why do the bears see a great opportunity to sell here? Because they can put their stop to above bar one, and they get way more than 2 to 1, selling below 22, selling below 20. That's always what I'm looking at. Now, if we go indeed above bar one, then what do bears do? If you have deep enough pockets, what do you do to always avoid a loss? Well, you scale in. So where do bears scale in? Well, if you sell the one close and you sell the one high, you want prices to come back 50%, somewhere in the middle here, so that you can break even. Okay, so you sell the close, you sell the high, your average price is 20.50. Okay, so you want to get out because we went above the high of your bar. You want to get out. So you want to get out 20.50. Guess what? Market doesn't give you 20.50. Okay, because it pulls back and then it runs up. So what do you do as a bear? Simple, you just sell and you double your short position at a measured move up. So that's 30.50. Now, what's now your average? Your average is now the average of your first average and your new scaling point. So that is 25.50. And bears will just hold, even if we go 50 points up. If they took a reasonable short, bears will just hold for that 25.50, and that will, in 90% of the cases, be reached. Little frog in the throat there. Okay, we're back. And let's get all of these lines away. So we went below bar 7, and what does that mean? Well, if you think about it, a bull trend is higher highs and higher lows. And so we had a bull trend, gap up, pull back, new high, pull back, new high. But we went below bar 6 and bar 7. And so we crossed the lower high, the higher low, sorry. So up, higher low, below 1, new high, pull back, new high. 6 was a new higher low, or 7 is a new higher low, depending on where you put your stop. But by going below it, we have stopped the bull trend. So it's no longer a bull trend. And so now, by definition, it is a trading range. Now, what's the high of the trading range? What's the low of the trading range? Nobody knows, but this is a good candidate for the high. And somewhere in this area, I think, would be a good candidate for the low of the trading range. Now, trading ranges are famous for closing their gaps. And I said the gap to the 3 high would probably close. 6 came close to it, we reversed up. The bear scaled in massively and we closed the gap. So it's trading range price action now. Doesn't mean that we cannot get a new high, but it means that if we get a new high, the bulls will take profits there instead of holding for a swing. Now, what would you do now if you bought the 7 close and price comes back to your price? Would you hold or would you exit? Right? No, you would exit. Okay, because this went way further down than you were hoping. Bar 7 by itself was disappointing. So if you did the same thing here, you bought the low, you bought the close, you're breaking even 25.75. You're going to be happy that bar 8 closed where it closed. You're going to take that and you're going to exit your longs. So bar 9 is selling off immediately because bulls are happy that we're getting back here. They're not buying here, they're exiting. they just will buy. If we break out now above 8, pull back, bulls will be happy to buy here and not here, because this is much more likely to go up a measured move after a successful breakout than where we are now. So sometimes you're way more happy to buy higher than to buy low, because here the probability of a successful breakout is small. If you see the breakout and then start buying, the probability of the successful breakout is way higher. And so I'd be happy to buy in this region. I'm not happy to buy in this region, because I think we can come down to below bar 1. What do bears see? Bears see that they have successfully went below bar 7. What do they want? Well, they want a measured move of this range. So they want to break out below 7. They see 7 as a range. They want to break out of that range and then get 1450. But bar 8 didn't even close below bar 7. So that was a failed breakout. Some bears would have sold below bar 7, sell more at the close of 8, and then get out, break even on their first entry, taking a profit on their second entry. Some of them would have sold below 6, and they would have just gone for break even. So they sold more at 8, and they got break even there, 24.25. Okay. So what are we doing? Well, we're waiting for either a new breakout to the upside and then selling that. But looking at the 15-minute chart, we're getting very weak. We have completed our 3 legs up. So it's likely going sideways here. And I'm still expecting that somewhere today we might close the gap to yesterday's high. No, I don't have a short setup. I don't have a long setup. So waiting is better. And let's see some of the questions. And do we have a wedge on the Globex? Yeah, we have 3 pushes up. Better to show if I do it here. We have 3 pushes up. We've reached the measured move target. We have 3 pushes up, push 1, push 2, push 3. But if that is short, are you shorting against a bull trend that lasted more than 45 points? No, the first pullback is going to fail and it's going to retest the high. So yes, this is a wedge, but by no means does that mean that I'm shorting up here. It means that I'm taking profit. Where is the selling pressure? Okay, we had 1 bear bar on the 50-minute chart in this whole thing, and it closed on its high almost. So this is incredibly strong. If anything, it can go sideways to down and then go up on the second leg up. Why do I say that? This is only the first leg on the hourly chart. So it can still pull back and form a second leg on the hourly chart. Look at the hourly chart here. We're at the top of a channel. We're at the top of a range. It's incredibly strong. So is it a magnet and are bulls just taking profits here and now we're going to sell off? Could be. Or is it so strong that we're going to get a breakout above the channel and a measured move up to 42.64? Well, that could be as well. If anything, the bulls would want to get to 33.50. They already had that. So I'm not shorting against this on the 60-minute chart. I'm not shorting against this on the 50-minute chart. I'm not seeing any shorts here on the 5-minute chart. So my head is currently not on short. My head is buying as low as possible because we're in the trading range. So better to buy below things. Bulls bought below 7 than it is to buy above things. Now, if gaps close on the 5-minute chart, will gaps then also close on the 50-minute chart? And I think they will. So the gap on the 15-minute chart is to the 8 high. Okay, that is 42.28.25. And so somewhere today we'll probably close that gap on 42.28.25. If you look at a good trading range day, like a trading range day that mostly goes sideways all day long, we had one recently where literally the day was just horizontal. Maybe I can't find it now. But even yesterday, the first 40 bars were relatively sideways in a range. How many times did you get 3 bear bars or 3 bull bars in a row? It's very uncommon in a trading range. So yes, here a third bear bar, but there was an inside bar. A third bull bar, but with a very small body, and it basically formed the end of a bull leg. Here, but every time the third bar is very disappointing. And it sort of signals the end of that leg. Now we have two bull bars on the 50-minute chart. So what is the chance that we're going to get a strong third bull bar here on the 50-minute chart? It's not all that great. So there are likely more bears at the highs than that there are bulls above a third bull bar. We tried to close the gap, but we didn't. So okay to be long, okay to be flat. Probably not okay to be short, unless you're really scalping. But we're forming a trading range between sort of the low of 1 and the high of 7 at the moment. Maybe even yesterday's close, 42.07. Is this a strong bull trend? No, it's not a strong bull trend. So it's a lag in the trading range. If it's a lag in the trading range, is it at the low of the trading range or at the high of the trading range? Well, it's at the high of the trading range. Okay. So I think the close on the 50-minute chart is going to be disappointing, and I think we're going to close the gap to 42.28.25, the high of 8. We're still inside the range. Our next target is 36.75. But if it's a trading range, then there is going to be a target that we're not going to reach. And so that will trap the bulls. And it could exactly be 37.25 that we're not going to reach. And it could be that we're going to reach 36.75. Good follow through, bar 10. So 36.75. That's reached. And the other one is reached as well. You can see it hits it exactly. And then it starts pulling back. Because bulls are not confident that they're going to get more than that. They're scalping out a part of their position at the 1-hour target. Okay, so they're not confident that they're going to get twice their reward. They're only confident that they're going to get once their reward. The bulls are not confident enough of 44.25. They'll take 37.25. Now, if we get a huge pullback from there, they probably took everything off. If we get a small pullback from there, they probably took half off. So I'm interested to see what's happening. Are we going to get like a big bear leg, and are we going to close the gap to the 8 high? Or was this a small pullback, and are we going to get continuation? On the RTH chart, we now also have 3 pushes. So we have push 1, bar 4, push 2, bar 7, push 3, 9, 10, 11. Exactly to a measured move, to a 1-hour move. So I'm not holding in here. I'm chickening out. So what can this become? Well, bulls would want to get it to 42.48, but this is the largest bar from the last 80 or so bars. Bar 15 was large, and now bar 11 is large. So it becomes climactic. 11 is large. So it becomes climactic. And bulls probably want to get to, let me check. I was going to say they probably want to get to cash 4,200, but we're already above it. So 4,200 cash is what? Is 4,220 or something futures. So it's a bull gift, right? If you're still long, this is a gift. Gifts are rare. Can we hit 42.48? Or is this going to pull back? I think it's very climactic if you see how it is the biggest bull bar in a long trend. Bulls would want to try and get to that 42.48. And it's the close of the close of the hour is coming. So the close of the hour on RTH is 5 minutes from now. What are the chances that the bull bar is going to close on its high? It's going to probably have some sort of a tail. So we might go higher and sell off a little, or we might go and pull back a little. It's becoming parabolic. Compare it with yesterday, so take away these lines. Got a beautiful channel here yesterday, channeled up all day. Broke out of the channel and formed the measured move. The size of the channel, 43.75 is the measured move. What are the chances that this is going higher if you already had a channel that worked for 80 bars and you're now breaking out and you're getting a measured move? The chances of this channel continuing are strongly against it. It's climactic, and usually it's going to fail within 5 to 10 bars. So yes, we can still go higher, but you're very high in a breakout above a bull channel, which is unsustainable price action. So we need to go sideways to down for a couple of bars to clear the climactic behavior. To down for a couple of bars to clear the climactic behavior. And it was a measured move to the tick of that channel. I said it was a gift, and gifts, if someone wants to give you a gift, you take it immediately. And I also said there is going to be a measured move that we're not going to reach, and so it could very well be the 42.48. Now I use a mirror chart. Regulars know it. A mirror chart is the chart pulled upside down, and so everything that looks bearish here in real is bullish, and everything that's bullish is bearish. You can see that the scale of the chart is negative. So we came down in a wedge, 1 push, 2 push, 3 pushes. This is a climactic third push, biggest bar in a long-term trend. And so do we not need to reverse back to this low and at least 50%? Probably. We could go a little lower. We probably need a second entry. And so if we look at the real chart, we can still go up a little bit. Bears need a second entry short, but we are in a climactic and profit-taking area. Also on the ETH, so we broke out above this range. Even a larger range already had a measured move up, or almost. So we're close to a lot of tops. This range was long surpassed. We're climactic, so we're going parabolic now. You can see the parabolic shape. So all charts tell me that there's not much more room to the upside. Doesn't mean I'm looking to sell. So when I'm saying don't have confidence that we're going another 20 points up, I'm not shorting, but it means that I'm saying if you're long and you have the 11 close, that is a gift. You take it. Bears will sell though, right? Bears will start scaling in, but they'll scale in with very deep pockets. So they'll sell the 11 close, but they're willing to sell all the way up to 4,300. And they can do that in steps of 10 points, 5 points, confident that we're going to hit at least the 7 high, confident that we're going to probably hit the 8 high, and they'll just sell all the way through. But that's not something that we can do because they have pockets that are way deeper than we have. Close of the first hour. Let's look at the hourly chart. to see it. So it's a big bull bar. It's at the close of the bull bar from October 25. So what have the bulls done here? Well, if you buy this close, and you buy this close, and you buy this close, then you're confident that it will come back to this close. So on the hourly chart, bulls have made about 100 points, scaling in lower, and now selling at that close. You can also see that this is a leg in what will become a trading range, and it's the biggest bull bar in 20 bars or so. So it needs to pull back maybe 50% before it can go 100 points higher. What did the bulls do on the 11 close? Well, they bought the 11 close. It was a big bull bar. 12 is disappointing for them, and so they exit at their entry. You can see that we went one tick above the close of 11. Close of 11 was 43.50. We went 43.75, and we're already back at least 2 points. So bulls know that when they didn't get an immediate next bull bar, that was disappointing. And now they're worried about being long at the top of a developing trading range. They exit out of their longs immediately. And that's what I say. If you're in a good trade, usually the market gives you 2 times to exit at a good price. So you could exit at a good price when when bar 11 closed, or you could exit at the same price, the same good price, when 12 closed and 13 shot up there. So usually, if you're in a good trade and if you're in a good target, you can get 2 chances. Market is going to give you 2 chances to exit at that price. So parabolic wedge, I don't know if I can draw it. Or maybe like this. This is a parabolic shape, right? So if it goes up steeper and steeper, like the top of a mountain, that is a parabolic wedge. Parabolic wedges are unsustainable, but they're also not reason to scale into shorts, because the parabolic wedge can go higher and higher. Just think about the Bitcoin top. A parabolic wedge can continue up for a very, very long time before it very violently comes down. It doesn't have to come down violently, but it comes down to at least 50%. Okay? And so even if we go 30 points, 20 points higher, this is a parabolic wedge. Just look at the parabolic shape. Look at the shape of the moving average. Okay, it was relatively good here in the channel, but now it starts accelerating up. Can it accelerate up a 3rd time? Yes, it can. It can go almost vertically up, but I would not want to be a part of it then with my stop still below 9 or below 8. Right? That is the problem at some point for every trend, is that you need a pullback to continue keeping your risk below 8 and 9. If you are with your stop below 8, that is more than 20 points. That's about the average of a leg on the Emini before institutions and traders need to either scale out of their position to reduce their risk, or they need a new stop location. Right now, you don't have a new stop location. You can't put your stop below 11 because it's not the start of a leg. So the only thing you can do really right now is take profits, keeping your stop there, and then wait till we get a new breakout so that you have a higher low with a higher stop, and then put your position back on. Could this form a second entry short? And would you buy that? Would you sell that second entry short? Well, it could form it. Would I want to short it? Probably not. There's no selling pressure right here. And so I'm sort of trapped out of longs and shorts at the same time. But this will need 10 bars, 2 legs, sideways to down. Okay, this 11 climax is going to have some sort of a sideways to down effect. So let's look at some questions. Why is this a trading range? Isn't it a breakout? Yes, it is a breakout, but it is also a leg in what will become a trading range. And so either at FOMC or later today, we'll come back, or tomorrow for that matter, because this is not a sustainable solid bull trend. Especially not with the context of yesterday, where we had a bull channel and we're breaking above a bull channel. That is not sustainable bullish behavior. If I buy the close of bar 9, should I put my protection below bar 8? Well, it's your trader's equation. So if you buy the close of 9, how do you feel if it goes below 8, right? If your premise is higher highs and higher lows, then maybe you want to have your stop below the most recent higher low. But definitely when you see 11, I would not want to see it come below 9 or below 8. So if I buy the close of 9, I would really be very scared if it goes below 8. And so I would put my stop probably in that area and otherwise there. Yeah. At the open of the market, we had a gap up and the market did not reject it and accepted it. I think this increases the chance of a bullish market. Absolutely. We did not close the gap to the breakout point. The breakout point was yesterday's high. And so it increases the chances of higher prices. A gap up in general already increases the chance of higher prices. The market is bullish. Right before the open, the Globex was bullish. So yeah, you're better off looking at longs than at shorts in such a market. 42.43 weekly gap, correct. But mind you, on weekly targets, so weekly measured moves, weekly ranges, weekly gaps, because it's weekly and there's also, we're trading hourly 15 and 5 as well. Weekly targets can easily be overshot by 50 points. Okay, so if you're scaling into a long or a short based on a weekly price point, no, don't be surprised if it goes 50 or 60 points against you before it goes with you. So for me, it's too dangerous to be looking at, yes, like it will be a magnet. If you're in a long and you see it, then it will be a magnet so that you can get there. But just the fact that, for example, something was a weekly bear close and so I'm selling, no, the overshoot on a weekly chart can be easily 50 points. Hey Tim, are higher lows the low of a trending bull bar? So at this moment, bar 9 low is the last higher low and not bar 8 low, like the stop loss below 9. Yeah, I think that's how I'm seeing at it, right? So if I see bar 9, this is the start of a new leg. I don't want to see prices come back below 9. And so I'm thinking that when we got to below 7 and 6, we're in the trading range and not a bull trend anymore since we broke a higher low. So somewhere at the new high, bulls will start taking profits, knowing that the 8 low is probably the low of a trading range. And right now, the 14 high is the high of a trading range. And we could go sideways in the 42.30, 42.40 area for the rest of the day until FOMC. In this case, bar 11, would you sell the close of the bar as climax? Nope. Because the market can stay irrational longer than you can remain solvent. If I had more bear pressure in here, I would be willing to sell, but there's no bear pressure in here, so I would be looking for a better pullback to go long. It's just too high away from everything right now. On the 15-minute chart, the stop is 35 points away. On the 5-minute chart, this looks like a failed second leg, so we might actually go below 13 and come somewhere in this area. We're miles away from the moving average. Do you analyze euro dollar in the room? Dollar is plunging. Not all the time. Sometimes we look at other charts during trading, just to take examples to show what's happening in some other markets, but we're not looking intraday at euro dollar per se. So another thing is to look at the encyclopedia. So Brooks Encyclopedia of Patterns has, I don't know, at least hundreds of slides here, probably thousands of slides about common patterns that happen at the open, common patterns that happen at the close, but also common patterns that happen at FOMC. So I've navigated here to the FOMC, so the F part of the encyclopedia, just to go through a couple of outcomes. I think the first part here is very important. There's usually no correlation with what took place before the announcement. So right at FOMC hour, price can do very weird things. It can go up, down, and it has nothing to do with the setup that you were in right before that news came out. Okay, so it comes out at, what is it, 11 a.m. Pacific. That is probably 2 p.m. Eastern. 75% chance of a sharp move up and down in the first 10 minutes. And so better to wait at least those 10 minutes to see what is setting up. Half the time, you're going to get a big up and then a big down. Half the time, you're going to get a big up and a pullback and more up, or down, a pullback and more down. So you just don't know what's going to happen. So give it some time. See it as a new day. A new day, you typically wait 4, 5, 6 bars before your first trade. And so see that as a new day as well. The risk is way bigger than normal. So that means your position has to be way smaller than normal to account for the increased risk. Okay. There's also just a very good advice that I give to a lot of traders and mentees that I have. Why not just take a bag of popcorn and enjoy the show rather than to actively trade it, right? These are days where you can blow up your account just as easily as double it. So why would you be, why just not take a bag of popcorn and watch what happens and see if you can find the trades as they're setting up to get a little bit more experience. So here's an example of a big bull trend. So you got a big bull bar, but that continuation, that second bar got almost all the way back down. Imagine how that was a very, very big bear bar at some point, only to shoot right back to the close of that first bar. So after these two bars, you might have had bulls that bought this close, bulls that scaled in, and at the close, they broke even. So at this close, we might not even have gotten a new bull bar because it's just already break even for a lot of bulls. But we got a third bull bar, and that's where a lot of bulls would start scaling in, anticipating probably a measured move the size of that opening or that first bar range, and then continuation there. You can see here what happened. You need a new high before you have a new low so that you can put your stop where it needs to be and scale in. You also have a failed bull breakout. So here you have a bull breakout, some follow through. The follow through doesn't close within the first bar. Get a bear bar, a small second leg, and then it starts selling off relentlessly. A measured move probably of this whole bull leg probably got a measured move to the downside and even more. Failed bear breakout, same thing. So a huge bull bar, a huge bear bar, then a bull bar, then a bear bar, and then ultimately it starts reversing back up again. So very volatile price action here, which can either be a trend or a trading range. So good to think about both scenarios. 25% of several big reversals. So up, down the whole day long. Very easy to lose a lot of your account, or very easy to make a lot of your account, depending on if you see what's happening at real time. Now, we will have, is Rose going to tackle FOMC? I think so. I think she'll be on. So let's see what she can tell you about it as it happens, but just be aware of, always be aware of this, because it's always intraday. So always be flat right before the announcement. And see it as a new day. So don't think about 15-minute or 5-minute targets that are right before it. Just anticipate that this is going to be a new day. A new news announcement will probably just reset everything that has happened before. So in the encyclopedia, there's a special section about FOMC. If you don't have access to encyclopedia, you can get it as a add-on into the Brooks trading course. Okay. So we have the measured move that we draw in. I didn't think we were going to reach it. I'm honest on that, but we reached it anyway. So it was that that range 7 and 8 was a little bit of a trading range, and we got a measured move up 42.48 to above that trading range. This is definitely a profit taken area, and it's definitely a bear scale in area. So 42.48 could be the high of the day. It's also close to bar 18. Bar 18, a 90% chance that you reach the high or the low of the day around bar 18. But 10% chance that you still get a new low and a new high at after the close of bar 18. And today might be one of them, because I still believe that a news event, FOMC, could actually make us go below bar 1. But I also think that we could still go above, what is it, 16? But we're definitely close to the high. We had what was a trading range, counts also as a final flag. So the fact that this went below a higher low meant that it's a trading range. We had a breakout above a trading range and a measured move up. This trading range counts as a final flag. And so there's a high chance that we'll actually come back into this range somewhere today, or at least test the 7 high. 4 strong closes on the 50-minute chart. And so we're not going to get more than a 50% pullback of the whole leg. We're probably going to go below bar 13 though. 60-minute chart on the Globex. You can see how we went into that channel trying to form a measured move up on this channel. So that will be 42.60, 425. I think that will be a little too far unless I can find some strong magnets here. 60-minute chart on the RTH, so regular trading hours. You can see that we went above the bar, but we're hesitating and we're actually coming down. So we're finding more sellers above the bar than buyers, but this bar still needs to grow another 38 minutes, so we can't say too much of it. 50-minute chart, you can clearly now see the parabolicism, however you say it. You can see that this is getting unsustainable, and we need to come and wash away some of this climactic behavior. We'll probably want to close the gap to 34.50, but we also probably want to come back to the close on this chart to 45.50. So what can bulls do on this chart? Well, the bulls can buy a 50% pullback. So they would be starting to buy in the 31.75 area, on the 34.50 area, knowing that we're probably going to come back to this close of 45.50. 50 area, knowing that we're probably going to come back to this close of 45.50. On the 5-minute chart, we're trying to form a double bottom. So bar 17, double bottom with bar 13. But this was probably some sort of a second leg trap. And the chances are that we're going to go at least a tick below 13. Are bulls trapped? No, bulls will not be trapped if they own the market. So this is a strong bull breakout, so bulls will not be trapped. You can see how bulls keep their stop to the low of 13. And if they bought the close of 13, then they can get out break even. If they bought their close on 15, spooked by the big bear bar of 16, well, they can buy the bear bar of 16 and they would be out break even. They could buy more at the low of 13 if they want, or they can just hold now and know that they'll get out break even on that close of 43.75. If you own the market, then you should be able to get out break even. And the bulls own the market today. But I'm not holding through this. I'm thinking that this is an area for a lot of bulls to exit and say goodbye to their longs. And a lot of bears will start to scale in at new highs. So they already scaled in at the new high above 11. And they want to get back to the high of 7. We haven't touched the moving average all day. That is also unusual and unsustainable. It's a second entry short in the developing trading range. So some bears will take it. But you're selling against this on the 50-minute chart, a parabolic top that probably needs to become a double top. So if you're selling, you need to be able to scale in higher, and that's very difficult to do. Someone says, I can't see a gap above 8. Well, the gaps here are to the high and the low, so there are multiple gaps, which are a sign of strength by the bulls, but which also will be a magnet. So there's a gap here, 9 high, 11 low. There's a gap to the 10 high and the 13 low. And we're now closing all of the gaps. So this is sort of a flag as well. And I think this was a flag as well. So it was a big flag, but it was definitely a range, because we went and up to exactly a measured move based on that range. Now, if this was a range and bears were happy in this range, they sell more here, more in the low of the range at the high of the range. So 27.75, and then to here. So you probably get back into the 28 region for bears to break even. And that's what we're doing now for bulls. We're breaking even for bulls, so some would have bought all the way up, and they're now exiting at a break-even price. The chances are that we're going to go sideways for a while, and lower than at least bar 13. Is the October 3 low also a magnet and target for the bulls? October 3. Oh yeah, I mentioned that you probably didn't join before the market opened, but I mentioned that we were probably going to go into this range. But it's a range, it's a target on the daily chart, so we might miss it today and then hit it tomorrow, right? And so if you're in a trade as from bar 4 and you're long, I wouldn't hold necessarily to a daily target, because daily targets, like, we can just hit them on any daily bar. And so if we're close to it, but you're seeing price action on the 5-minute chart that tells you to get out of longs, then you should get out of longs. But it's definitely, yes, it's definitely a target for the bulls. I have noticed many times 2 times actual risk is about 1 times initial risk. Would you think it's a good strategy to work with 2 contracts and get profit with one and then put the other? So it's a good question, person that's asking there. What I would advise you to do is to look at the either the Discord of this trading room or the brookstradingcourse.com website, where Brad Wolf is hosting Q&A sessions. And that would give you a wonderful chance to ask this question, and then he can actually take you through that in larger detail than I can do while I'm in a live trading room. So definitely a good question. I would be very happy to go into it, but I probably talk about that question for 20 minutes. So do advise you to take it in there, and you'll get some very good insight. Do you use level 2 time and sales for entries, or simply price action? Simply price action. This is all I'm using. And when I'm trading by myself, I'm not even using the moving average. But this is all really that I'm looking at. So I have my 50 minutes. Before the day, I have my daily, weekly overviews. If I can't find where the market's going, I'll look at the 60-minute chart. But this is what I have, and this is what I use. And I have a very simple instrument here for me where I just enter orders, and that's it. Orders, stops, and targets. How often at all, if at all, do you refer to the 1-minute chart to help refine entries? 0 time. I will never look at the 1-minute chart. I will try to infer sometimes what the 1-minute chart is doing. So if I see bar 1 going up, down, up, down, up, down, I think bar 1 is in the trading range. But I can see it on this chart, so I don't need to look at the 1-minute chart. Is it possible for a trader to not scale in and still be profitable? Absolutely. But sometimes what you'll find is that you took a wrong entry, that the market is not going to where you thought it was going, but to something else instead. And so sometimes you just accept that you have a risk reward that wasn't the risk reward that you were thinking it was going to be, because you entered at the wrong time. Your risk reward might be a little smaller, but you learn from that and then you take it the next time. So yeah, you can just be profitable by entering once and by exiting once. Absolutely. Joined late, not holding, sitting on hands. Yeah, well, if you show up late for work, you miss the best part. Okay, that was some of the questions. Bar 18. So bar 18 closed, 90% chance that we've seen the high or the low. But I think a day like this is a candidate for 10% of times where we haven't seen the high and we haven't seen the low yet. So on a normal day, I would say we've seen the low of the day, but I'm not so sure about it yet. So another high one. Well, what's the chances of a high one being successful in this environment? Well, we're going sideways. So we're definitely in a flag or in a trading range right now. High one worked here, high one worked here. Will a high one work here? I think based on the fact that it's a double bottom, I would buy the close and I would want to see 44.75, yes, but I don't think this is going to race up to a new high. I think the bulls are going to exit at 45.50 and 44.75. So it's a tricky buy above 18. I'd much rather buy the close of 18, double bottom bull bar, and then take 44.75 and take 45.50. Remember, this close of bar 15 is also a close on the 50-minute bar. So it's got a high probability of being reached on this double bottom long setup. But I don't think from the double bottom long 18, we're going to shoot up 10 points. So we're scalping in this environment. Bears are starting to do the same. They want to put their stop to above 16 and they want to short things back to the close of 18 because that's their bear bar. And so they would want to short at exactly the same price as where the bulls would want to exit longs, 45.50. And just to rack it up, just to rack it back to 42.25. So if bears want to short at that 45.50 and bulls want to exit at that 45.50, I would definitely be out at 45.50 as well. That's now. Let's see what happens. Okay. A ton of messages here that I'm saying 45.50. Of course, I mean 42.50. But you can see here what happens. Okay, so we went to 42, 45.50, and we didn't go further than a tick above. So every bull exited there, either buying the close of 18, exiting there, or as a disappointed 50-minute bar bull, exiting at your by the close last entry price. And bulls are selling there, bears are selling there. Why? They want to get back to their 18 close. They sold the bear close at 42.25, 42.25. They have their stop above 16. They sell the 50% pullback back to their entry price, and they'll make money that way. The fact that that price for the bulls and the bears was exactly at the same level, namely the 42, 45, 50, told me that that would be an exit point and an entry point. And so you can see exactly what happened. We go there, we hit it, we fill everybody, and we come down. And so can the bears make money? If we hit 42, 42, 25, then the bears can now make money as well. We'll probably still have to go a little bit higher, but it's now turning sideways. We're sideways now for 8 bars, 9 bars. We'll probably need to extend it with a couple of more bars. I said a high one in an environment like this is probably not going to work, so we'll probably come down a little bit more, or at least go sideways. Somebody's asking, have you tried other ways of trading like supply, demand, support, resistance, volume profile, etc. Yes, that's why I was losing before. And since I am a 100% price action trader, the world has changed for me in a good way. I'm not saying what works and what doesn't work. I think all that you need is a chart that looks like this. Okay, chart that has bars, and it will show me volume. I can tell you exactly where the volume was on all of these bars. If I see them tick by tick, I can tell you exactly that the volume was high on 11 and the volume was probably high on 1. So I don't need to see volume. I don't need to see support and resistance because I know where support and resistance are from the price action. So this is, I think, all you need to be profitable. Now, everybody will have different styles, and that's, I think, very visible in the trading room as well. You'll see that as soon as Rose comes up and as soon as Brad comes up, they'll have a different style on the same price action. So that's very, but we all end up buying. You put us all in a room, we trade our own ways. We all end up buying and selling in the same areas. And some will buy and sell based on the fact that we ran up 20 points, and others will buy and sell based on the fact that this is climactic in a measured move. But we'll all be ending up buying in here and selling in here and exiting in here. So there's different styles, but they're all based on Brooks price action. But it's even funny that even though everything is based on Brooks price action, you can still have different styles of where to enter or where to exit. And I think a lot of it is given by risk tolerance, psychology, and how aggressive you can be. Like, would you enter second entry short here below 20, like low probability, high reward, or are you more high probability, low reward type of trader? Are you more of a scalp or a swing trader? All of those things come into effect. I am probably notorious for trading based on targets, so I'll have a target first, a stop second, and an entry later. Other traders will probably enter and find out where we're going later. That's all okay. You can see that bears are making money, right? They sold the 18 close, which was a bear bar here. They sold exactly at the 50% pullback, and they're now making money on both of their entries. And that is a sign that this is a trading range. This was already a trading range, so I still think that we can come down to about moving average. And what was this gap? 34.50. Even 31.50, 31.75 would be possible. And looking to see if this can become a breakout measured move. So 31.25 would be the measured move. That will probably be too far, but the low of 11 is what bears will want to get to, and the high of 7. So they won't be selling here for that. They will be selling higher. Why would they not sell right now 37.50? Well, again, it's a question of risk and reward. If your target is the 11 low, your stop is to above 21 high, you can see that your risk reward is less than 1 to 1. So entering with a sell market order here, putting your stop there, is not, well, I mean, it is a good trader's equation, but you need to be right more than half the time. Are you right in a short here on a big bull day? Well, you might be, but your chances are not 80%. Okay, so sometimes when you see this, you'll actually see prices come up before they can come down, just so that bears can come in at a better price, at a more favorable risk reward for the 11 low or for the 7 high. So it kept the gap open with a tick. We might go up a little bit before coming down, or bears are actually even stronger and they just want to get to 28.75, which is the gap to the 8 high that I also mentioned. Even stronger and they just want to get to 28.75, which is the gap to the 8 high that I also mentioned. I think bulls will scale in at around the bar 9 high, 8 high. But they might not have, so they have their exit as well. So just need to find out how much the bears can get. It's a two-legged pullback right now, but it's also still trading range since bar 6. And so I wouldn't be surprised if we actually close gaps to 8 high, 9 high, and 11 low. 11 low would for me be the minimum that the bears would need and that the bears will get. That's the 34.57 high. That was a reasonable target. Why? We had a breakout to a measured move in a developing trading range. So a breakout often revisits the breakout point. And I said bears were going to scale in at the high and more at the measured move. So they need to go a little bit further down to be able to break even. But again, look at the mirror chart, right? You had this breakout below a bear channel. That is unsustainable. And so within a couple of bars, you'll get a reversal, in our case, back down, but on the mirror chart back up. We're now battling and seeing what is at the moving average. Will there be bulls here? Probably not. I think we need to go lower to find more bulls. You can get a mirror chart almost on every platform. So whatever platform you're using, I'm using NinjaTrader, but it's also on TradeStation. You can get it on Trade08 and TradingView. Different ways to get it, but sometimes it helps to see bear setups a little better. Most traders have a good eye for bull setups, and so bear setups, sometimes you need a mirror chart to get some extra confirmation on your read. Sometimes it helps you to see in one overview, like, oh, that's where we're going, if I look at the mirror chart. Bulls will want to buy around the moving average. This is the first chance that they have since all day that there's a touch of the moving average. So can they have been buying above the average price, and now we're at the average price. So some bulls will see this as buying at a discount, but they will also have to scale in lower for getting out at the highs. We're at that 42.30 price where I think that's about 4,200 on the cash index. And I think 4,200 on the cash index is about the price where we want to be when the FOMC release comes out. So it could very well be that this area is going to be the price going into 2 p.m. Eastern, going into FOMC. Now, what if we think about the follow through 22 on 21? It is a bear bar follow through, but look at it, it closed within 21. So it's basically a failed breakout of the range that 21 created. So bulls will definitely be scaling in around the low, but I said we're gonna go to the 11 low, which we are now, and possibly the 9 high, but we're at around a 50% pullback since bar 4. Okay, so we're at that we're at that 50% pullback point. So more bulls will start scaling in, and bears will start scaling out from the second entry short from below 20. So to the 9 high if they can, but the 11 low will have already bulls scaling in. But again, think about it. If you buy the 11 close and you're hoping for a measured move up, you'll buy more at the 11 low. But now you're buying at the 11 low to get out break even. So you're hoping that we're going to come to above 22, because that would be your break even point. And it's probably going to happen. We have 3 bear bars developing on the 50-minute chart. So chances are that the first breakout will fail and will come back down. And there's still a chance that we'll get all the way to the low of the day because of that one tick, two tick gap to yesterday's high. So I wouldn't be surprised if we would come down all the way to the 9 high, and then if we break the 9 low, then there's mayhem. I don't think we're going to get that far. There's a chance for bears to get there. And that will be the ultimate bull trap, of course, because bulls are scaling in here, trying to get back to the 18 low. And so the ultimate pain trade for them would be that they would have to scale in all the way, and that would ultimately going to go below bar 1. It's exactly a measured move from the upper trading range, 31.25. No, measured correctly, Tim. 31.50. They reached exactly a measured move on the upper trading range. So we have a lower trading range, we have an upper trading range. We broke below the upper trading range and we set a measured move. We broke above the lower trading range and we set a measured move. So it's a trending trading range type of environment. And that's why I said, as soon as we broke this higher low below 6, we were in the trading range. Also, we went higher. We had a measured move of that trading range, but it is a developing trading range and not a strong bull trend that was going to last 2 more hours. So this bar 8 kept me out of trouble from keeping longs in here. This is probably going to be the low of this bear leg, 31.50. And we're probably going to bounce from here. But strong leg down. So any reversal will probably fail and come back down. And so we had a couple of measured moves already, a couple of measured moves above the 1 to 30.50. Then we had a trading range 7 and 8. Final flag. We had a measured move above that to 48. Then we had a double bottom. The double bottom failed. Set up a measured move down to 31.50. If I measured that correctly, 31.50. And so that's now complete as well. So 3 different measured moves down. Bears are taking profits here. Bulls are scaling in. And now we're going to get sort of a bounce before probably a second leg down, maybe to the 9 high, which is the last remaining gap to the downside that's open. Gaps to the upside that are open, 17, 18 low, 21 low that are open, 17, 18 low, 21 low. And maybe 45.50 even again, if the bears can reach it. If the bulls can reach it, sorry. So the bulls would now have to show up, but it's going to be only for a scalp. This is not returning to a new high of the day anymore. A parabolic wedge needs 2 legs down. Is this enough for 2 legs down? I don't think so, because it's only 1 leg down on the 50-minute chart. So I'm more expecting something like this. Alternatively, it could be this to here. But I do think that any bounce will actually be sold. I think we're going to get a bounce, but I think the bounce will be sold by the bears. Bulls hope that this is just a 50% pullback and that we're going to get back to the highs. But if this is a trading range, then we should be able to close the gap to the 8 high. And the next one is, of course, the 9 low, right? That would be the next magnet for the bears. But this is, for now, I think the end of the leg. We're at the moving average. We're at that measured move. You can see all of the bears took final profits there. So this is going to start reversing at least a little bit up. Second hour is closing. The first hour closed here, bar 12. Second hour is now a bear bar. So if you as a bull bought the first hourly close, what do you want to do when you see this big bear bar on the hourly? Let me show you the hourly. Okay, I said we went above it and we started selling off. What do you want to do when you see this bear bar close and you bought the close of bar 1? Well, you want to probably buy more and get out at your original entry. So 42.41 is where you want to exit now. You're not holding now for more. You feel in trouble, right? You bought that 42.41. You see this big bear bar. You suddenly realize that you've been buying at the top of a trading range, at the top of a U shape here, and you'd be very happy if you come back to 42.41. Right? It's also a 50% pullback from that bar. So from this whole range, 42.32.25. So you buy the close of this bar in 19 seconds, and you want to get out 42.41. So in here, the upside is probably limited to about that bar 12 close. Now, does the same count for the 15-minute bulls? No, because the 15-minute bulls bought that close. They got disappointed here, and they had a chance to get out because this close was 42.45.50, and this high was 42.45.75. So they already had a chance to be disappointed, buy more, and get out. So I'm thinking that if we bounce here and we come close to the 12 close, that we're going to turn down again from about there. 24 was an inside bar, so in a trading range, inside bar at the low of a trading range, we'll probably find more buyers there than sellers. Bears can accelerate this to the 9 low, but I think they're out. I think we're going to bounce. Same thing. In a trading range, you have three bear bars. What's the chance of a big fourth bear bar? Not all that great. And it's clearly now a trading range, big up, big down. And so the next 15-minute bar is probably going to be either a disappointing bear bar or a bull bar. We can also look at the encyclopedia for gap updates. So if we go to the G part for gap up, gap on daily chart, small gap up, remained open and formed low of the day. So there's a possibility that the day looks a little bit like this. I just think that we had a larger sell-off than that. As well, small gaps usually close in the first hour. We didn't have that. So the bulls were quite strong. They didn't close the gap to yesterday's high in the first hour. Gap on the 50-minute chart, on the 5-minute chart. So there's a chance that this is going to stay the low of the day. But then there's the FOMC report release that might actually be able to close it. Okay? But then there's the FOMC report release that might actually be able to close it. At the moment, it's an II, right? 24 was inside 23, 25 is until now inside 24. But I guess the bulls are ready to create their bounce. Right, 50% pullback point. We had so many bear bars that it's going to take a while before the bulls will actually be happy to buy and buy more. But if we go below 24, we'll probably soon find buyers there. Someone's asking what's the chances of bar 21 now creating a 1R? So you would expect 28.75. We'll have to see. There's a chance because of 22, but 22, if 22 closed more strongly below 21, chances would have been bigger. I think we'll get to the 8 high, but I don't think from here. I think we need to go higher to find a price good enough to sell. Right? So the 21 close, if we get back to the 21 close, it would be actually a good area to sell there for the 28.75. And if we get to the 12 close, that would certainly be a good chance for bears to sell. Because think about it, if you sell 40.25, put your stop above 21, now you have 2-to-1 to get to the 8 high. So I think bears are not selling here, they're selling higher for a better risk reward. They know that we're probably going to go into this space, 22 high, 21 close, we're going to go back into that area. And so if you're a bear, you know that we're going to go there. Why would you short here? You're not going to short here, you're going to short here, and then see if you can get there. Going to short here, you're going to short here, and then see if you can get there. You always need to consider the risk reward on the trade. I will never take one that has a risk reward worse than 1-to-1. I like 2-to-1, but you don't always get them. Question, what is the probability that we have seen that we get a major trend down before FOMC and then reverse up? I think low. Generally, what you see as time goes by and as we come closer to FOMC release, that price action dries up a little bit. So less and less, some traders are quitting trading an hour before, some quit 10 minutes before, some quit 2 hours before. So as you get closer and closer, more traders will give up on remaining in a position, and the last 50 minutes or so can just be completely flatline until the news release. So the chances of us now getting a big bear trend, I think, are slower because there's not so much fuel left in the tank, if you will, before the news release. Big question around gaps. What is a gap? Why is it gap? Is it trap traders? What's the benefit of closing gaps? Why should there be buyers and sellers looking at gap closes? In a trading range environment, maybe less on a day like this, but let me take an example like here. In an environment like this, where everything is very much of a trading range, up, down, up, down, up, down, you'll find limit bears selling above bars, and you'll find stop order bulls buying above bars. So what that means is that if a bear sells in this bear leg, if a bear sells above 7, they expect to make money. So they sell with a limit order here, and they'll sell more at the 8 close, at the 9 close. They might have their stop here, or they're willing to sell even higher, but they're expecting to make money. And so they'll sell more higher, and they will get out at their first entry, making money on all of their later entries. So if you see this as a gap, there's a limit order selling that 7 high, and they want to make money because it's a trading range, price will come back to them. And so what they've done is probably they've been selling the 11 close and the 7 high, making money that way. Now, I don't do that because I know that we're probably going higher, but I'm willing to sell here below 11 to get at least back to the 3 close and the 7 high. Same happens here, it's a trading range. So bears will sell the high of 14, they'll sell the close of 15, maybe the close of 18, and then when price comes back at their original entry price, they take profits on their later sells, breaking even on their first. Same thing here, maybe probably 28, but every gap here closed because it's a trading range environment. And on a trading range environment, you can buy and sell everywhere and make money if you scale in and manage your trades correctly. That's exactly what is happening on these breakouts. And because this was a trading range 7-8, they did the same thing. Bears sold here the 7 high. So as 11 broke out, bears were selling with a limit order at that 7 high. They sold maybe more at the measured move, but definitely more at the 16 close. And they made money exiting at their first entry, profiting on their second entries. Not something you want to do necessarily, because what if this is not a trading range and it just continues up another 100 points before the next day it comes down, because that happens as well. But it is definitely a great thing to see if, for example, you sold a low 2 below 20, then you see the 21 close. Well, you want to hold for at least the 7 high, probably the 11 low. High 2 coming up. So high 1, 26 went above 25. High 2 if 27 shapes up nicely in 28, but it will be for a scalp. So I'm thinking we can go to the 21 close, and I'm thinking we can come close to the 12 close. We have a micro double bottom 24, 25. But this was strong enough for a test, at least back to the 24 close. So if you're taking this as a high 2, then I wouldn't hold it for a new high. I would hold it for a scalp, unless we see some spectacular price action breaking out of this range, breaking out of the 21 high, then yes, then we're going higher. But you're selling against a strong leg down on a parabolic wedge that probably needs 2 legs down. So I think this could be 1 leg, pull back, 2nd leg. Price action works on any market, any time frame that has enough volume. As an example, you see that the Nasdaq was more aggressive at the open, and so I would be looking for a measured move, and it exactly hit that measured move exactly off the opening range. So here you got a breakout of the opening range. Here you have a breakout from the higher trading range also into the lower trading range, and closing some gaps there. So different chart will have different measures and will have different ways of trading, but in general, any time frame, any chart works the same. The one thing that you just cannot do is seeing something on the E-mini and then buying or selling immediately on the Nasdaq. Like, that is not the way. Like, you can't look at one chart and trade another instrument. If you trade an instrument, you look at the chart of that instrument only. Correlations, all of that, they work just as many times as they fail. So that's not the way to trade. But can you trade the Nasdaq by just looking at the chart of the Nasdaq? Yeah, absolutely. Works exactly the same as E-mini or YM, which is the Dow, or ZM, which is the 10-year Treasury, or Euro Dollar. Like, absolutely doesn't matter. I trade mostly on the DAX German index in the morning. Just works exactly like any other chart. And Russell for that matter as well. See, of course. And Russell for that matter as well. See, of course. Is there a ticker for the mirror chart? No, the mirror chart here is an indicator that you need to download for the InnoTrader. It's on their own website. So can we get an extra point or so to the 21 close? Because we need to fill up some gas into the Ferrari, of course. That's just joking. A friend of mine always talks about how he needs to fill up his Ferrari. So when there's a good trade, that's what he says. It is a high 2, but look at how much sideways price action there is here, right? Double top, double bottom. It's basically breakout mode. Micro double top, micro double bottom. Measured move to the upside leads us to where? Almost to 12 close. Measured move to the downside leads us to where? 27, 25. So I think it's starting to look like a good breakout, and I think we could go to the 12 close, or close to the 12 close, but at least 21. So I think it's starting to look like a good breakout, and I think we could go to the 12 close, or close to the 12 close, but at least 21. It's a mini breakout mode with the double top and the double bottom. The bears will want to get back to at least the 24 close, but their stop is currently above 21. So if they want to get back to the 24 close, this is about 50%. So this is where the risk reward equals 1 to 1. And so they might wait until we get there and start selling there. If they want to get to the 8 high, then it's 37.25 where they can sell. So I'm thinking break above the breakup mode. And so 40.75 should be where we want to get to, and the 12 close is 41. We'll have to see how this bar develops, bar 28. If it's strongly bullish, then yes, then the chances increase that we're going to go to the close of 12, 42.41. We hit the 21 close. That was minimum target for bulls. Now, what is breakout mode? Breakout mode is typically where you'll have a double bottom and a double top in not too of a big range. So if the range is 15 points, then it's probably not a good breakout mode, unless it's breakout mode on the open of the day. But a breakout mode here is a nice breakout mode. So we have a micro double bottom 24.25, micro double top 26.27. That's going to get a measured move of one or the other. So measured move to the upside would be 12, measured move to the downside would be around the 9 low. Bulls want to close the bar 28 above that double top, and they fail or are successful depending on how you look at it, because the close is exactly at that time. So if we now come back to the 24 close, bears will be happy, but bulls will scale in if they can at the 24 close, because they now want to go to the 12 close measured move up. First breakout may have failed, second breakout is probably gonna be successful, and then take us right to that hourly close. Remember, why are we going to the hourly close? Because of the hourly chart. Bulls will have bought the close of the hourly chart, they'll buy more 50% lower, and when it gets back to their entry price, they'll exit. And right now, I think they're in a good trade, and it's likely that will come close to their target 42.41. Their target 42.41. If the bears sell off here, then we're going to go to the 8 high. And indeed, then the 22 close, 28.75. Okay. So it says, it's my first time here, welcome. And I only trade stocks. I need to learn how to find stocks to trade, because when moving stocks hit the scanners, it's usually too late to enter. Does this room teach about finding stocks to trade? No, it teaches you how to trade any stock. So you don't need to find a stock. You can just take any stock and then trade that for forever, or just trade, in this case, the futures. Price action is all about understanding what price is doing, and then from that, learn to make a judgment call about where the probability is, where the stop is, and where the target is. And we're finding trades that give us 1 to 2 risk reward. And if we find those more often than 50%, we're profitable traders. And so the technology around price action is just to indicate and find where price is coming from, where price is going to, and where the probabilities are. Okay? And if you find that out, then it doesn't matter if it's Amazon, Facebook, Emini, DAX, YM, or treasuries. You can apply that to any concept. It seems that the vast majority of price action traders prefer to trade the ES or DAX. Are there reasons for not trading currencies? No, currencies is probably the most liquid and biggest market in the world. So euro dollar, yen dollar, what have you, you can all trade that, and you'll be fine. Yeah. Actually, the Brooks trading course has a special edition of currency trading. Not that it's different, but it's pips and not ticks, and Some things are different, but trades just the same way. Is this a high 2 entry? Yep. High 1 above 26, above 25. High 2 pull back. High 2 above 27. High 2 is at a good price. There's obvious targets above, so yes, it's a high 2 entry. When you trade for yourself, do you trade all day? Nope, because I fatigue after a couple of hours. So I trade in the morning the DAX at 9 CET, and if I want to, I trade the afternoon in the US, but I'm usually out after about 2 hours because of I need my hyper focus and I need my concentration, and when I notice it is going away from me, then I stop. All right, we're coming to 5 minutes to the hour. That means that I'm running out of time on my session. Rose is going to take over. Those who don't know Rose, well, she'll introduce herself probably, but just as skilled as anyone else, and she'll be taking you through the middle part. So probably more of sideways and slightly up to the FOMC release. Rose is also the person that takes the most shifts in the trading room on a monthly basis. So you can learn a lot of things from her. We'll keep the question box open in both the webinar and in the trading room. So just continue asking questions there, guys. See if I have a last round of things. So what I'm expecting, I'm still expecting us to go a little bit higher, maybe to the 12 close and then lower. So either here, this is the bounce from this leg down, would probably get a second leg down. I probably think the 8 high is going to be touched or tested, and then we'll get to a neutral price. So where is neutral? It seems that 42.32 area, or somewhere where cash is around 4,200, is probably going to be neutral, and then FOMC kicks in. That will start a whole new day. So please be flat, be right or be flat is what I used to say before that news event, and then I think Brad will take us through the FOMC, and I will definitely keep an eye on what's happening as well. All right, guys, I was just checking some other questions, but we'll have the questions. There's no questions that Rose can answer, so I'll leave it to her. You'll see how slow we're going up, right? So is this a high 2 that's going to take us to a new high of the day? No, it's a pullback from a bear leg. It's trying to reach higher. It's trying to reach to the 12 close, but there's almost no momentum. 29 was good, but 30 is already disappointing. So we're hesitating here. There's going to be more sellers around this area probably than buyers. And so at some point, the bulls will give up and the bears can get their 8 high, although the bulls are still trying to get to that 12 close. Okay. So with that, again, very, very warm welcome to new members. Thank you so much, existing members, for joining. My name was Tim Stout, and I thank you for joining. Stay tuned, stay in this webinar. I'm going to sign out, and then Rose is going to come in. Thank you very much, everyone, and talk to you soon. Bye-bye.